let's talk tech. And if anything's interest rate sensitive, it is tech. Our next guest says that the recent bull run in tech has legs, but one key group will get left behind. Jared Weisfeld is the U.S. tech sector specialist at Jefferies. I think tech's been acting pretty good. I don't know, Jared, and I don't know what that informs us about rates. I think that plays into the idea that maybe they don't need to stay where they are as long. But just technically, is this going back to let people in 20% below where it is right now? I don't know. Do you think do you think the truck gets backed up to where you can load up?
So, to your point, Joe, the viciousness of the rally is truly, remarkable. And let's put things in perspective. The Nasdaq is now up 15% off lows, right? We're talking about in the last 2 weeks. Semis have been leading us higher, up 25% in that time period. Software, as measured by the IGV, up 17% in that time period. So a lot of this is a function of, I think you guys were hitting it right on the head in terms of peak inflation and peak Powell, right? Look what's happened to the 10-year yield, crashing from 3.5% to almost 2.5% yesterday. And this group is the most sensitive with respect to the interest rate environment. But I think the key point is that earnings have been far better than any of us have thought in terms of resiliency from the tech generals: Amazon, Microsoft, Google, Apple. And I can't emphasize it enough in terms of positioning. Everyone generally is underweight tech. It is the lowest in the last 5 years in terms of relative tech exposure. So I think that can certainly keep the group going.
The names that people loved, it's not a 30% pullback either, Jared. That's another thing that kind of gets me. If you even thought about buying some of those stocks where they were, and you can't buy them down 50%, then you were wrong. You're just an idiot the entire time to ever want to buy them, right? Isn't Netflix a buy below 200?
It's funny you mentioned that, Joe, because you had this vicious rotation that's occurred over the last 6 months where investors were selling all of MFANG to go buy energy, to go buy the notion of an energy super cycle. And now guess what has to happen? We need to re-rotate back into tech because positioning is so underweight. And all of a sudden you're seeing Microsoft show general resiliency in Azure, which is the key growth driver. Amazon's AWS growing 33% year on year, which is a good key barometer for the economy. So I think you're going to see continued reorientation back towards tech. And we're getting closer to December. So the FOMO is on in terms of fear of missing out. And I think you're going to have that.
Yeah. It's like I don't know. I've seen it before. It's like, geez, I was scared at the bottom, and now that vicious snapback, and I'm never going to get that chance again. New lows or not in the Nasdaq, Jared? New lows or not?
I don't think we see new lows. I think you need to be highly selective. I think we've seen a recent move higher in software, but software has still lagged. So I think software is probably the most attractive. I think you need to be careful in terms of the multiple that you're underwriting. But don't forget about the M&A put in software. You had Thoma Bravo on the tape with a $3 billion acquisition this morning. We've had more software M&A activity this year than we had last year, and we're only in August. So I certainly think that there are a ton of opportunities in software in particular. Jared,
thanks. It's good to have you on. And I felt kind of good listening to you. I don't know. Maybe everybody's not as bearish as I hear a lot. So let's trade this. Guy, the heating pad, that was a good one. But anyway, you brought me candy. You've never brought me like a heating pad, have you?
Yeah, remember I brought you those things that Shaq sells, those pads, those thermopads that you put the battery in and it helps you. You know exactly what I'm talking about. And there was another time where you hurt your thumb, and I brought you Epsom salt so you could soak it on set with Andrew and Becky. So don't even sit there and tell me that I don't do that.
You know what? You should have
remember.
You should have brought me Prevagen, because I don't remember a lot of this stuff. So how do we trade this, Guy?
Prevagen, by the way, the worst named product in the history of mankind, because nobody remembers it, and they make it so you can remember. Listen, I understand, Joe. I totally get what you're saying. Maybe we're all too negative, and maybe we've seen the lows, and the market's not going to give you that opportunity again. I just don't think we're in an environment where. Okay. And listen, quickly, Apple earnings, were they great? No. Actually, 2% year-over-year revenue growth is the worst we've seen in a while. Microsoft traded down to 242 after they reported, before they said, by the way, we're not seeing a slowdown in demand. So it's not like these earnings were blockbuster. The stock reactions were.
I have no. Do we go counterclockwise or clockwise? We better. Let's go counter. Karen.
Well, I just, he sounds very bearish, but to Guy's credit, he absolutely was bullish at the bottom. You know, he had that 4,100 out there.
For a trade, right?
Yes, that 4,100 out there, which actually was pretty far away at the time. So kudos to Guy. I'm in his camp now.
Okay.
And I just think down rather than up.